Hey guys, USDTRY. So market sniper video. We're on the weekly long-term time frame. This has been almost a one-way bet, but for one inverted, we did trade very smallly, which was almost counter the trend. I remember this very tight squeeze many years ago. Now it was back in 12 and 13 that it broke. And it extended for a really long time period. From that point in and around the 1.7s, that was the lira, then pop above 2. It wasn't long before it then was above 3, and so she goes. Anyway, so it's clear that the annualized trend in Turkey has been one of great currency devaluation. The Turkish lira having slipped immensely. And let's drop it down to the lower time frames. You can see that even recently there was a period of strength. That's where we had that little inverted that made a bit of downside. There was dollar weakness rolled up into that, as you would expect. Every time you're going long one, you are going short the other. Every time you're going short one, you are going long the other. So you're all aware of that. Anyway, that aside, largely it's been minor little corrections, but big moves to the upside. So what have we got more recently? A couple of setups. You can see these making target here, and then a bit more churn, and then big overperformance. Setting up this structure over here, huge 4.9. This is all the Erdogan and his control structure grabbing Turkey by the throat, according to many's opinions. Second impulse and down. Now that is what we call a relative low 2 break, which is why it violates normal requirements for a third impulse. So relative low 2 break is when you're squeezing and the news comes ahead of that third impulse and it just smashes it up. There was actually a prime on a lower time frame. You can check that out on our premium boards and everything we cover in that if you are interested. And it's not necessarily for everybody, as I always repeat. So there was a nice little, let's drop a time frame. Let's get it to, so this is the big structure. Overall, the big structure's target is implying a 5059 type target push. If we drop it down and start to have a look in this since the break area, you can see a nice little wind up there that helped push you into this level. That saw you make the second interim. You overran it, and then we've been going super tight on what is the second interim, which is very traditional HVF method behavior, respecting interim levels and loss of momentum to the upside, requiring little wind-ups to give you strength to push up to the next level, which you then overperform to and run, then a sustained period of low volatility. Now, whilst my suspicion is continuation is what will serve you well, and that this will give you a move from roughly where you are right now, 4.84, all the way to 5058. So you've got to bear in mind that's quite some pips that we're calling for. That's 1600 plus another almost 2,400 lira pips. But this, with any volatility squeeze, the only thing you're likely to get wrong sometimes could be direction. It could be that it's done too much too soon, and that's a slap in the face event, and we have a squeeze and that it could break down. So you want to have those stops in the system. I would give yourself some breathing room. You've got a tweezer bottom there at that level, and marginally lower over there. So you want to be in and around the key level of significance that was the target, maybe just on the inside of that, to be super safe until such time as you have a triggering event. Then you can tighten up to the low 3, which we've got as working at that level there, 4.82. Target on the wind-up is 504, but I would expect overperformance to finish the job. It's very unlikely you're going to stop in that gap, pull back and take a long time and pull all the way back and then make that target. In other words, those two lines should fall together relatively soon after each other. So I would trade to the full macro of the bigger HVF on the basis of this wind-up. The downside, as I've already highlighted, this could be slap in the face event and a squeeze, and you get a revisit down to either this funnel or that funnel. In other words, it's deemed too much has been done. but there is going to be an impulsive event coming. It's probably, knowing Turkey, going to be news-led anyway. Many things are. In all markets, particularly the Turkish one. So we'll see what happens. But a nice little risk reward if you can get it. So for those that can buy it on the dip, you could, for example, maybe get filled there, and you can run it to that point there. After you've had your triggering event, I suggest you could even get that risk tightened right the way up to just under that red line there, which will give you quite a nice risk reward, as you can see. Better part of, wait for it. Let's drop the time frame, why don't we? Let's remember to do that. There we can actually read. So if I drop it down to the 15, we got a quarter of the time there. Your risk reward will be very, very big. Mainly because you've squeezed that risk. It's 23.82, it seems like. I'm going to expand that a little. That's also assuming that you get a fill down at that level. I don't think it's too far away that you could expect a dip. You don't have to wait that deep, but if you don't, you will of course spoil your risk reward dynamics. I would take it up to the full target there. So 24, a 24 RRR, and it could be attainable in quite short circumstance. However, before I would have that stop there, I would play probably safe and just be on the other side of this purple line over here. So entries at that level with a stop there. That's about 12.35 for the initial instance. Once you get back into the funnel and you start tipping your hat, you could have a primer. I'm illustrating a squeeze within a squeeze. You'll learn more about that on the program. Go to themarketsniper.com to find out more. But if you don't, you might just drift up towards the edge there and break it. What could be a warning or a concern? Impulsive sell-off quite low here, and then low vol, and then another skip down quite low and dancing with the red line. That could show a tendency that this could be up for inversion. So we're very highly confident of an impulsive move, and we're broadly confident that it would be in the continuation direction to all the targets. In other words, HVF method is the law of the assumption that as long as you get in compliance, you keep on assuming target will be made, but you size for loss. In other words, you need to know how far it is and how much pain that would be for you. So that's the Lira update. A wind up at the second interim of a macro all the way to the target. There, both of the wind up and the full macro target probably run as one. So there's your trade, quite potentially nice and deep in the double digits as well. Don't know too many strategies that do that for you. Speak to you all soon. And as I say, if interested, we are doing on the 31st of July a free webinar. It's not what you make, it's what you keep. Learning the art of defense, taking quick small losses faster, recognizing changes in trends, and building towards the ability to short in bear markets. Ask the poor crypto guys about that one, for retaining your wealth. Okay, as I say, it's free, no options, but it's also not necessarily an activity trading for everybody. It can get emotional, requires diligence and emotional control, and self-awareness, and many other interesting things. A great personal development journey if you feel up for it. Speak to you all soon.